Hey guys, Philipp Schaedler here, your local realtor in Los Angeles. I was able to talk to a friend of mine, Mike Meena at Augusta Financial, a mortgage broker, and we're talking about some interesting stuff in regards to forbearance. If you're in forbearance, there is a way to get the balloon payment incorporated into a refi. If you have refied already, there is also a chance to get a second loan or mortgage for the balloon payment because the forbearance terms are ending soon. And some of the banks require 24 months, and if that's too little of a time for you to pay back, you should listen to what we have to say on this interview with Mike Meena and myself. Okay, check it out. Mike, can you hear me?
Yeah, how you doing, Philip?
Hey, good, Mike. How are you? Thank you so much for being on here.
No problem. What is going on, my friend?
Well, I just, I'm doing some different things for my clients. I have questions for my clients about the current mortgage situation, for example, for forbearance terms, where the mortgage market is heading and what direction. I get all these questions, and I figured better to ask than you, the expert in the field, who can maybe shine some light on that. And then I also have some questions for you I've written down here. But where do you see the mortgage market heading? Do you think the interest rates going to remain as where they are?
I think rates are going to stay pretty low for now. I don't think they're going anywhere in the next 2 to 3 years. I think we'll stay in the high twos, low threes. We might dip into the low twos at some point once the economy really hits pretty hard. So that's kind of what we're seeing right now. I don't see anything changing. I was reading something this morning. There's 110,000 businesses gone due to COVID. So something like that I was reading, it was some crazy number.
Yeah.
So I don't see this economy recovering tomorrow.
Okay, yeah, I can imagine. Yeah, and I cannot even think how the commercial real estate must be suffering, because I just went to meet my escrow officer yesterday in Encino, and I looked around and I could not believe how many storefronts are gone, out of business, for lease. I mean, it's horrifying. It's really, once you start walking around, it's really horrifying. That brings me actually to the next subject, because do you see a large wave of foreclosure coming? Because I have some people that are asking me, what happens when the forbearance terms is over? And I think some of the forbearance terms are ending in the next couple of months. Isn't that the case?
Yeah, here's the crazy part about forbearance, because I did a little research on this. So let's say I went into forbearance on March 17th and I stopped making my payment. I didn't make April, May, June, July, August, September, October, November, or December. So 9 months. What's happened to real estate prices in the last 9 months? They've increased. So if I owed $400,000 at a 4% interest rate, and what am I paying? $16,000 a year. Say it's 12 grand that I didn't pay on my mortgage. And let's say I didn't pay my property taxes. My property value's probably gone up 30, 40, $50,000 since March 17th or March 15th, whatever date that was, that they put us under lockdown originally. So the other thing that's really super cool is a lot of our clients that are now back to work, their banks are like, okay, well, you don't have to pay that forbearance, but go ahead. Now they're going to refi. They refi to a 2.75% rate or a 2.5% rate. And now all of a sudden they've got a lower rate than what they had originally, a lower payment, even putting in those 3, 4, 6, 8, 12 payments back. So they have to be either get current or make payments for 3 months is what Fannie Mae's guideline is on that. So if they stop missing their payments in August and they made August, September, October, right now here in December, they would already be able to qualify for a loan or at whatever point. So, and even if they started a refi today, they might have just made their December payment, make their January and make February. By the time we close, they're good. So foreclosures, I don't see it happen. I just don't, because when I bought my first house in 1989, I paid 7% of my principal and interest payment went to principal. Today, you're paying 44, 45% on a 30-year mortgage. Right. So every month on a $500,000 loan, you're paying $1,200, $1,500 off a month. You're like, why would I lose this house?
Right. That's true.
So
yeah.
That foreclosures, I just don't see it happening. And I think that's why we keep seeing prices elevate. It's just kind of that catch-22 situation.
I was just going to say, so if you don't see those foreclosures coming, then it will keep the market stable. We'll keep it as where it is now with the prices steadily increasing.
Which is, yeah, it's just stupid prices. I mean, not stupid prices, because the people are looking at the payment is what they're looking at today. And the payment is still cheaper than rent.
Oh, yeah. Mortgage is probably half what it cost 6 years ago, right?
Yeah, exactly.
Something like that, yeah.
I did something the other day. I don't know if you saw that on my blog. I thought it was interesting. I bought a house in 1989, and Fannie Mae, they increased their loan limits. So they based those loan limits off of where, the mortgage, or what the values are. So you go back to when I started in business, I think in 1988 or 89 or something like that. And I went back there, and I think the mortgage loan limit was like 160 at the time, or 170, and now it's 548 or something like that.
Wow.
But your payment's like $250 off of what it would have been then, because the rates are so low. They're not 9.5% anymore. They're 2.5% for a purchase.
Wow. That's amazing. Yeah, that's good info. That's very good info. I had another question. So for first-time home buyers, usually, I tell them a year prior to clean up their credit score. Don't open up any new credit card accounts, and have their credit cards maybe no more loaded than 10 or 20%. Is there anything else you would suggest for first-time home buyers?
No, keep your credit clean. That's all I can say. I mean, don't buy too much crazy stuff. And no, keep the credit clean. Make sure the income, especially if you're self-employed, shows well enough on your tax returns, because the difference between a Fannie Mae loan or an FHA loan and a non-QM loan is like double the interest rate. So if you had to show bank statements as a self-employed person, you're going to be paying 5 to 6% interest, where your friend who has a W-2 job working for Disney, they're going to be getting a 2.5% interest rate. So I think it's really important that, if you're self-employed, show the income for a year or two if you really want to buy a house, and then, cheat the IRS thereafter, but get that low interest rate in.
I was just going to ask you, so this is, you're referring to somebody doesn't report all their income. It's going to basically bite them in the rear with higher interest.
Yeah, pay it for a couple of years. Pay the taxes for a couple of years. Smile, get that low interest rate, and then do what you do.
Right, do what you want to do. Yeah. Okay. Now, another question I had from people is that unemployment money that a lot of people have been hit hard, since this COVID, since March, and they have gotten some unemployment, some 20, 30, 40,000, like I hear, till now. And that does not count towards a mortgage, right?
It doesn't count towards your income. So if you are unemployed, but this is where it gets a little sticky. So, and there's so many qualifying issues, but let's say, for instance, again, I was working at Disney. I got furloughed for 4 months, and I came back to work at Disney in August or September whenever they came back. I'm a salaried individual making $8,000 a month. Fine. I'm back to work now. I get my $8,000 a month. That's all that matters. Doesn't matter what I made during COVID. If I'm on furlough now, I can't qualify for a loan. Now you take your studio buyers, though, say the guys who are working as a grip or something else, a lighting tech or something at the studios. What's the situation there? Well, those guys, we have to average their income, because they work for this job here one day on Tuesdays, and on Thursdays they're here, and on Saturdays they're here, and 3 months here at this gig, and 2 months here. And then they took off from March until September or October or August or whatever that number was. Now I have to take their income year to date. Some of those guys are making 10 or 12 grand a month. They made 10 grand, 10 grand, 10 grand for the first 3 months, 0, 0, 0, 0, 0, 10, 10, 10. Now I've got $60,000. Now I'm averaging them out at 6 grand a month. They're not qualifying for what they normally qualify for. So pretty crappy rule set by Fannie Mae, Freddie Mac, FHA, VA, all of them. They just don't care. They're just like, hey, we don't want to deal with that. And self-employed people's even tougher right now.
Yeah, it's interesting because in a way, I mean, it's money in the bank. It's, and considering the circumstances with COVID, you would think that they might make an exception with that. But I had that question a lot, because literally people were unemployed, but did make some money, were able to make their payments, their mortgage payments, and not in default. And still it doesn't count, so they're kind of like frustrated about it, because some people are like they're making their rent payments and everything is up to date basically. And they really are in the position where they could buy a house and apply for a mortgage, but they are just being denied because of that.
Correct.
There's not much to do there. Another question I had, in going back to the forbearance terms, because there was another question people asked me, when they get this balloon payment that they need to pay, and I know some banks, I believe they give you 24 months to pay it off, somewhere around there. Is there because some people think 24 months is just not enough. That's still a big burden financially. Depending on how much months have accumulated, assuming 5-6 months of payments. Is there a way to get sort of a second mortgage to pay this off in 30 years? Or is there an option like that?
Well, keep in mind, anybody who can qualify for a loan is going to refinance out of that higher interest rate, first of all, before too long. So again, you could put 8 payments on the back, make 3 payments, and we can take all those 8 payments that are on the back and refinance those into that mortgage. So could you get a second mortgage? Yes, same rules apply. Get back to work for three, make 3 payments, show that you have the ability to repay, and the lender's going to give you that loan, assuming you qualify based on your income.
Got it. Okay. Yeah, because, I don't know, 30, 40,000, 50,000 over 30 years might be what, $150 or whatever a month, rather than, having it all to pay up front, because that's what a lot of people are worried about, and I think some of the forbearance terms are ending January or February, I think. So they're kind of nervous because a lot of people didn't know what forbearance was in the first place, because I think in 2008, it was also miscommunicated that they can just put it on hold, which some people thought was deferred payment being added onto the back of the loan, the mortgage terms. But then when they found out, no, it's all due now. And that's what a lot of people were kind of learning a really hard lesson at that time. Another question I had, so I had a client, I think we emailed about this subject before, and I have a client from Switzerland who is interested in purchasing a home here in Beverly Hills, and the budget is about $3 million. And they have no green card, they have no citizenship. And we talked about that there are some ways, I think with 35% down payment, they can get some type of loan or financing. Is that correct?
So there's a foreign national loan that they can qualify for. So as a foreign national, I'm sure Switzerland's one of those countries that's the good boys. There's certain countries they won't do, but from Switzerland, we would not have a problem. They can just go ahead and qualify based on their down payment, and they're going to get a rate that's not 2.5 or 3%, but probably in the 4s or 5s. With that amount of money down, but it's basically like a no peaky loan. They're not going to look at anything, and they just qualify based off of who they are. No credit needed or anything like that. We'd ask for a few financial documents to show where the down payment's coming from and that kind of thing.
I see. Okay, so it doesn't matter. They don't have an American FICO score. That won't play into that.
Right, not an issue at all.
Okay, wow. Okay, interesting. Yeah, I think that's pretty much all I had for you. I really appreciate your time, because this has been very enlightening for me. And I'm going to send this over to my clients who had all these questions. Some of them, I'm sure, have not verbalized those questions, but probably are in the same boat, because we're in difficult times. But I want to thank you. And I forgot to introduce in the beginning. Can you tell real quick who you are? Mike Meena from Augusta Financial.
Yeah, it's Mike Meena with Augusta Financial. We've been in business for 25 years now. I've been around in the industry for about 29 years. They gave me the title of president, which I'm not sure why, but probably because I opened the company. You can reach me anytime at my office at 661-291-2222 or on my cell at 661-714-6258 with any questions you have, whether it's purchase, refinance, we'll help you with anything, or just getting yourself straightened out to be able to buy 1, 2, 3, or 10 years down the road. And one last thing that I will say is it's really important to own. And whatever it takes really is just so important. And again, if you're looking at a mortgage payment versus rent, just owning a property today and you're going, oh, that payment's high. Rents are not going down, and rents have never gone down from what I've seen in my 29 years in this industry. They might flatten out. They might give 1 month free. Owning is so important. And if you don't own 1 or 2, buy 10 if you can, because it's really the most important thing, I think. And it's going to give you that financial freedom.
It's funny you mentioned that, you brought this up, because I bought my townhouse 2 years ago, and I could have been happier. And about 2 years ago, I did a video. I did previewing a home in Palm Springs for a client of mine. And I did a video there where I kind of forecasted that rents, like a lot of people like to live in areas where they rent, but they could never afford to buy. And this is a majority. Now, if you're lucky enough to have enough capital to just buy in that area, great, but most people are not. So what I predicted was that a lot of people are going to be squeezed out for what you just said. Rents are always going to go up. And I remember, another condo I sold here in North Hills, I think the gentleman paid around $1,850 a rent and bought also a condo around $300,000. And by refinancing now, he pays like, I think, $1,400 something, like less. And with HOA, he's still lower than the $850 he was before, because HOA is like $225 or $250. So totally to your point, I 100% agree. And also what I'm telling people is, sometimes it's necessary to maybe geographically relocate, because the government has programs where you're a first-time home buyer, but you have to stay there for 2 years. And then if you want to go back to the high rent area, you always can, because you can rent out your space and somebody's now paying off your mortgage, and you can go back to the high rent area, which I think is insane, because you're much better off purchasing again. But at least that, I think, for me was is an entryway into real estate, because you have it for 5 years or 6 years, and then you sell it and buy a bigger place and move up to real estate that way. I think that's kind of what you're referring to as well, right?
Yeah, it's absolutely it. I think that real estate, the key there is your mortgage is always going to stay the same or get better if you don't overfinance, and rents are going to continue to rise. And the more real estate you have, like I said, you're going to just keep buy more, buy more, buy more. And again, we've had people move from the west side, they move into the valley, and eventually they get back to the west side once they're able to do it. But they're only able to buy that first-time buyer house with 5% down or whatever it is.
Right.
No, you got to bite the bullet sometimes and make sacrifices in this world. You know, and once you make those sacrifices, it's worth it.
Yeah, it pays off. Exactly. That's, you know, it doesn't look like in the beginning. And I always say, always purchase in an area where where you could live yourself in worst case scenario. You know, don't buy in an area where you would never live yourself. That's kind of one of the tips I give people, because, you know, sometimes it happens, you buy a property and maybe you're renting someplace and all of a sudden the economy turns and now you have to move into your place. You want to make sure that at least it's an area where you would live if necessary.
Yeah, I always say too, one more thing on real estate is my grandmother paid $3,000 for her house in Los Feliz.
Wow.
And my mother paid 30 grand for a house in North Hollywood. And I paid 200 for my first house out here in Santa Clarita. And so you think about that, and my daughter's buying her first house and she's spending like $850 or something like that on her first house.
Wow.
So you look at how that progresses.
Yes.
Every time, and all we do is go up. And there doesn't seem to be more supply. All there seems to be is more demand every generation. And even though California doesn't seem to be increasing at the same levels that it did in the 60s and 70s and 80s, it's still got more people here, and more people are being born every year. And, you know, think about where real estate will be for your kids, your grandkids, and your great-grandkids, because prices are not going to come down. California is still the place that everybody wants to be. We might not like certain things about it, but look at the weather outside here in the middle of December.
Yeah, absolutely agree. And, you know, it touched an interesting point, because I've talked to some people who told me also, you know, their parents bought a house at 50,000 many, many years ago, maybe in the 40s or 20s even. And at that time, they looked at each other and said, oh my gosh, this is so much money, 50,000, you know, and they were wondering, well, how much more expensive can homes get? And when you look fast forward to now, where the average home here in the Valley, entry home, is like 650, 700,000. And you also wonder, well, how much further will it go? But to your point, it's totally accurate, because it's just a part of inflation. It just gets more and more expensive, but it keeps going up and up and up. And that's the thing about real estate, even though it may have some dips every now and then, but continuously over 10, 20 years, it always goes up. That's my opinion.
Always going to rise. Yep. Always going to come back.
Thank you so much, Mike. You rock. You're amazing. Thank you for your time. I know you're a busy guy, and I'll see you in the AG meetings again. We'll talk soon. Okay.
Got it. We'll talk to you real soon. Thanks so much.
Okay. Thank you.
Thanks a lot.
You too. Bye-bye.